Yeah, look, a few months ago when we downgraded Docusign, I mean, our view that this was going to be a work from home poster child, and it was a cockroach thesis, never just one cut. There were going to be more cuts coming, and that's what we saw happening. The only reason we don't have a sell rating on this is just because there's still an opportunity on some of these e-signature and CLM deals, as well as potential M&A, that I think it puts some sort of floor in the stock. But point is, if there's another cut coming or our checks get worse, then this is a sell where the stock could get halved from here.
Okay, so in part, you're looking at this as an event-driven stock, that you're urging people to stay with the story because of a possible M&A situation down the road, which obviously would be beneficial to the shares.
Yeah, and just to be clear, we don't have a buy rating on it. You know, we downgraded a number of months ago on our fears that something like this would happen. This is one that for investors that own it, it's one after this. If it's sort of a risk reward play, we're not bullish on it at all. But just given the opportunity that Docusign has, that's why we don't have a sell rating. But let's just be clear. You talked about icebergs. They ran into an iceberg, and it's been unmitigated disaster. And I think last night, a huge black eye quarter, not just for Docusign, but I think a lot of these high flyer names that continue to sell off.
What if it's just never going to be smooth sailing again for a company like this that did so well in the pandemic, and it's not the only story like that we could have a conversation about?
Well, if it continues, then Docusign could get under drinking age in terms of where that could go if they continue to miss. And then ultimately that thing starts to fall apart, and this could be a lot worse than at least it seems right now.
Wow. Let's move to Rivian, because your headline there is equally a stunner, right? Twilight Zone quarter is how you characterize it. You cut the price target to $60 from $130, and then I'm scratching my head saying, well, why the heck does he have an outperform? Reiterating that today. How could you possibly call something a Twilight Zone quarter, cut its price target by more than half, and then reiterate an outperform?
Yeah, it's a great question. And look, if I look at Rivian, this has been from the moment of the IPO, it's really been a twilight zone in terms of communication, the supply chain issues, the price increase, and then ultimately the mea culpa where they didn't do it. But our bullishness in terms of why we stay positive on this cautiously is because of our overall view of pickup trucks in terms of moving to EVs. I think Rivian, if I look out the next 3 to 4 years, they still have a massive opportunity in terms of the conversion. No doubt, one more PR issue, one more supply chain or communication, the story could be potentially done. And I'll tell you right now, in 21 years, this has probably been one of our top 3 worst calls, being bullish on this coming out of the gates. But look, we're not throwing the towel in here because I do still believe in the overall story in terms of where EV conversion is going. But no, this has been, really what I would call a disaster story for investors that believed in it. And it's been very unfortunate in terms of the way that management's gone about it.